I'm going to show you three different fair value gaps, and I'm going to also show you how they are not all created equal. One of them you need to stay away from. The other one is all right. It's okay. The other one, though, it's seen war. And that's the one I want on my side when I use my 5-minute opening range break with a fair value gap. I want the one on my side that's seen some things. Let me tell you what I mean. So this custom hand-drawn one-of-one piece by me right here is a fair value gap. I don't even have my wicks lined up correctly, which is going to bug me. Anyways, we're not going to let it bug us. We're just going to talk about it. This is a fair value gap. How do you determine a fair value gap? A fair value gap is a 3-candle pattern that encompasses 3 candles starting with the wicks. So from right here, the top of wick number 1 to the bottom of wick number 2. If there is a gap, this creates the fair value gap, which would be presented in this range right here. So this would be your fair value gap. This whole green zone right here means that buyers push the market so fast that there's an imbalance. This is a buy side imbalance. So if someone says, "Oh yeah, I trade imbalances," or that's my end, I'm looking for my confluences are imbalances. They're looking for fair value gaps. They're just trying to sound smarter than you. So again, I'll just tell you guys, I mean, I don't mean to reiterate myself over and over, but when you're learning about fair value gaps, it's important to understand exactly what it is. So it's a 3-candle pattern, and it goes from wick to wick. The top of the first wick, or if it's reversed, bearish, it would be the bottom of the first wick because it's the opposite. The first wick to the bottom or top of the third wick, third candle wick, creates an imbalance or a fair value gap. Now, this right here is a standard textbook perfect fair value gap, but there are times where you get weird ones that pop up, something like this. Now, this, in truth, is a fair value gap. The bottom of this candle, wick, to this one would have a fair value gap right here. But, like I said, not all fair value gaps are created equal. This is not one that would give you much confidence. And it shouldn't, because you have a big bearish candle in conjunction with 2 bullish candles that make your fair value gap. So technically, there is an imbalance. It was never fully recovered. And this imbalance right here, again, it qualifies fair value gap. But when you're working off of, like, my trading strategy is the opening range break with a fair value gap or an imbalance to the buy side or the sell side. That's what I look for as an additional indicator that, hey, it's moving quickly in one direction. There's liquidity being left behind somewhere, whether it's bullish or bearish. That's my indicator and my additional confluence that I look for before I enter in on an opening range break. This fair value gap setup right here, this is the least likely to succeed and have this range hold. Let me show you my favorite one, though, of the one that I really like that you probably would not guess. This one here, this is my ideal fair value gap. And you're kind of like, hey, Aaron, that looks just like the first one we looked at. No, the first one we looked at had a big body like this. This wick was smaller like that. This is the first one we looked at. I like this one because is what it shows me is that there was a lot of price action here. A lot of battles between buyers and sellers, and buyers won. The bodies don't overlap too much. You don't have a body that's way down here with a little tiny wick at the bottom. The bodies don't overlap. The wicks are down here, and there was a battle, and buyers won. This is my favorite fair value gap because it just shows me buyers are here, buyers are representing, and they are not going to lose this. And then most likely a couple candles later, the buy pressure will kind of die out. Sellers will try to come back and clear this area, and it won't work. And then you're running on your opening range break. So when I say not all fair value gaps are created equal, this is what I mean. I want a fair value gap that is made up of 3 candles moving in the same direction with a battle on the third leg. And that battle on the third leg wins by the direction I'm moving. Whether it's buyers or sellers, I don't care. If it's reversed, completely fine with me. But I want to see a decent sized fair value gap all green or all red, and I want to see a battle on the third candle that my team wins. Like, I want my team to go to war in the direction I want to go, and I want them to be victorious. And when they are, I'll see the next couple candles. There may be some reds that pop in here because that, it'll just happen. But if my fair value gap holds into the next 1 minute candle and then the next 1 minute, maybe there's a red push down and then there's a big green spike up, my fair value gap is going to hold, and I'm in love with the setup right there, especially if I already broke outside of the range. But if I see a fair value gap like this with a big body candle like that, I am just waiting to just have the market dump on me. That's pretty much what I'm expecting to happen. I want to see the battle. If I don't see the battle, I don't entirely love the fair value gap. It doesn't mean I won't make a play on it, because sometimes I will still make a play, and sometimes this fair value gap doesn't always present itself, but when it does, the battle has been won. The fair value gap holds. I'm confident to go in on my play. I check the box off my list and I rock and roll. So let's just do a couple quick little overviews here and kind of go over what we know right now on why all of these aren't created equal. This one here, lowest probability to hold. And the reason for it, buy side, big buy candle that actually creates your imbalance, and then you get counter pressure, counter sellers, or counter buyers if you're bearish, and you're already coming in. Even though technically you have a fair value gap, it's being encroached on. It would have been bigger had we been looking at the other examples. So this one right here, 1 out of 10, don't recommend. This fair value gap right here, it's just kind of meh. It's all right, 5 out of 10. It hasn't faced a challenge back into this yet, so it could be good, but your very next few candles, sellers are not going to let this run. If they didn't have a battle here to try and retain this, this is okay. May do really well. You may get caught. You may have a complete... This is what I would expect to happen. If I see a fair value gap like this, then this would be gone and you would no longer have a fair value gap. If you don't have a battle on this third candle to make sure buyers are in position and they're battling for it, I would expect to immediately get stopped out. But then this guy shows up. 10 out of 10. Highly recommended. Seen war. Been there. War veteran. Battling. Winning. Sellers try to step in. Buyers say no. This is defended. This is the fair value gap I'm looking for. And this doesn't even have to be like this. This could be like, down here. This could be a little bit bigger. These bodies aren't overlapping. They're about even with each other. There's big wicks right here, so it was a fight. This was defended. Buyers wanted it. Sellers wanted it. Buyers wanted it more, and then we're moving on. Chances are, if it comes back into this zone where this fair value gap is presented off of this one, it's not going anywhere. Not saying it won't and it can't happen, but this is the fair value gap you want to see right here.